Okay. So after the uncredited checks, the next course is dishonored check. And professors, when we say dishonored check, it means a check that the bank has refused payment, have refused for payment due to errors or insufficient balance on the issuer's bank account. Okay, so there is that. Okay, Adam wants me to go over the uncredited checks. Okay, so let me go back to that. Well, after these theories, when we begin the numbers or the practicals, I'll demonstrate to you how these things affect both the cash book and the bank statement for you to appreciate better. But for now, I want you to know on the face value what unpresented checks are, uncredited checks are, and so as the other causes. So the uncredited checks, I'm saying that these are checks that has been deposited with the bank. So for example, I go to GCB, I have a bank account with GCB. Then I take like 2 checks to GCB that deposit this into my bank account. So what it means is that GCB is supposed to, add to my account balance the amount on those checks. It happens that the bank delays in crediting the checks. I gave you a relatable experience where you take your money to the mobile money vendor for him or her to do cash in, as we call it. Okay. The Momo vendor says, okay, because of network, you give me the money. When the network is good, I'll do it for you. So you will go to your house thinking that, oh, I have deposited 100 cedis cash in, right? So my Momo balance should be 100 cedis. You will check and then your Momo balance is 0. What is causing that? The Momo vendor has not done the credits. So that demonstration relates to when you take a check to a bank for the bank to credit your account, but the bank has not credited, probably due to network issues, or the check has to go through the clearing house. And I told you it takes some days for a check to clear, especially if it's a different bank's check. Okay. So it means that you have sent the check, all right, but the bank has not done the credits into your bank account. That is uncredited checks. So Adam, I don't know if it's okay now for you. So the demonstration I gave with the Momo vendor gives you the clearer picture that you take the check to the bank, but due to some reasons, the bank has not done the credit. Like when you take the money to the Momo vendor, he takes it and says, I'll do it, but then the person has not done it. That's uncredited checks. Okay. Please, any other question? Good. So Adam is okay now. We can continue. So the dishonored check, that one we say that the check you sent for payment, the bank says they cannot pay because maybe the money you have in your account is not enough. So you have 100 cedis in your account, you have written a check of 1,000 Ghana cedis. That is not possible. The bank will not honor such a check. Or the date on the check is wrong. We are in 2025 and you are quoting 1997 dates. No bank will pay that. As a matter of fact, checks have expiration dates in Ghana, I think 6 months. So any date beyond 6 months, the bank would consider it as a stale check and would not pay. So imagine even quoting 2022 on your check. That is an error. The bank will not pay in 2025. It's also possible that instead of writing 31st January, you wrote 51st January. The bank will not pay, but there's nothing like 51st. Or if the amount in words and the amount in figures do not tally. On the face of the check, you have the amount in words and the amount in figures. Please, I'll take a picture of all these documents and show on the screens, probably in our next lesson, so that you appreciate some of these things I'm talking about. So if you have written in figures 2,000, but in words it's 3,000, the bank will not pay. Okay. So when all these things happen, the bank will not pay and the check will be declared as a dishonored check. Now what happens is that you have recorded in your cash book that you have issued a check for payment. But because the bank did not pay, so there will be no records at the bank. Hence, there will be that discrepancy between your records and that of the bank. Okay, so that is the dishonored check. The next one is the standing orders. Please, if you are not clear about the if you are not clear with the dishonored check, please let me know so that I go over. If not, the fourth point is standing order. When we talk of a standing order, it is an instruction, okay? An instruction to a bank for the bank to make some periodic payment on your behalf. Some of the customers can do this automatic renewal and subscriptions, okay? So what happens is that immediately the time is up, the bank will deduct the money. Example, if you tell the bank to pay your DSTV subscriptions every month, then every month they are going to pay and deduct from your account. So what happens is that the customer may forget that he or she has done such standing order. Another relatable experience I can give is when you do your automatic bundle renewals. You see, MTN will deduct you when the time is up, but you may have forgotten. So you are there thinking that you have 50 cedis in your account. You go and check your balance is 40. Then you say, why? You check and you see that, it's because of the automatic bundle renewal. So your account has been debited. Okay, so that's what happens with the standing order. The next one is direct credits or credit transfer. And what this simply means is that somebody has made payment into your account for which you are not aware. Okay, so as we are in class right now, if somebody has sent you money into your Momo account, you may not know. So you'll be there thinking that you have 250 cedis in your account. You go to the Momo vendor to do some withdrawal, you check your balance and you see that, you have 5,000 Ghana cedis. Then you say, hey, what happened? You check and probably, your rich uncle has sent you some money, but you were not aware. So you thought you had 250 in your account. That is a direct credit. The opposite of this is a direct debit. That one is an unknowing payment from your account. And a typical example I gave was the e-levy. Okay, it was a direct payment the government was taking from our Momo account. Immediately you do a transaction, it's taken off. Okay, so we also have the direct debit or the direct payment, or what we call debit transfers. Then we have interest, incomes, or dividend paid directly into the bank account. Some of the banks, even MTN gives what we call the Momo interest. You are there unknowingly, you see 3 cedis credited into your account as interest from so and so to so and so. So the bank can also give you interest, and that can cause the two balances to disagree. Then we have bank charges, where the bank is charging you for the services it is rendering to you. Okay. Sometimes when we go for ATM cards, they charge us. When we go for a checkbook, they charge us. If they do that mobile banking alerts, they charge you. So those are the bank charges. Then we have the last one, errors made by the bank. So here, sometimes the bank can make errors. You are going to deposit money into an account, and the teller seated there made a mistake and put it in a different account. Okay. Or somebody is also coming to do a deposit into his account, and then the teller makes mistakes. It ends up in your account. So the bank can make errors. And lastly, errors made by the bookkeeper in preparing the bank account in the cash book. So the person also preparing the cash book can also make errors, right? Okay, so professors, these are how many? 10 causes of the differences between the balance on our bank statement and the balance on our cash book. Please, any question up to this point? Any question, professors? No questions for me? Okay. So let me do this, and then I think we'll wrap up with the second session and begin the third session, if there is. If not, then probably I'll give you some small exercise for you to do for me in the remaining minutes. So what we have done is trying to establish, transaction between a bank and then the bank's customers, which are mostly businesses or other individuals, right? And we are saying that there is that possibility that the records kept by the bank and the records kept by the customer would have some discrepancy in the balances. So how then do you cater for these discrepancies? The customer would have to prepare a reconciliation statement. So we define the bank reconciliation statement, and then we define the records kept by the bank, which is the bank statement, right? We already know the cash book, so we don't need to define the cash book, which is prepared by the customer. Now, we saw that there are some reasons that may lead to these differences. Amongst them are unpresented check, uncredited checks, bank charges, standing order, direct transfers or credit transfers. Okay. Now, what I have to do next is to help you appreciate how these transactions are recorded by the bank on the bank statement. So, professors, just observe on the screen. This is a typical bank statement, but before that, let me draw the cash book, okay, or the bank account. As you know, this is our typical bank account with the debits side and the credit side. Now, if you pick a bank statement, these are the things you see on the bank statement. So you have a first column for date, a second column for the particulars, a third column for the debits, fourth for the credits, and the last one is the balance column. Okay. So this is a bank statement. I'll show you a real one probably in our next class so that you see how the banks prepare this bank statement. Okay. So this is the date. This column is for the date. Okay. The other one is for the narration or particulars. And this side is the debit side. And this side is the credit side. And the last one is the balance. So that column will tell you the balance on the account at each point in time. Okay. So ideally, look at how it happens. If you, the customer, you debit your cash book, the bank would have to credit your bank statement. And please take note of this arrangement, okay, because it will be very useful when we are doing the reconciliation. So whatever you debit in your cash book, it is supposed to be credited in your bank statement. Why? Because you know from our double entries that when you receive money or when you receive a check, you debit your bank account, right? But on the other hand, the bank will credit your account with them. And then whatever you credit in your cash book, which is whatever you pay, the bank will do what? Debit you. So it's actually the opposite of what you do in your cash book. When you debit, the bank credits. When you credit, the bank what? Debits. Okay. If I want to use the receipt and payment, you remember that we debit receipts. When we receive check, we debit it. So we debit receipts and then we credit payment. In our cash book. But on our bank statement, we rather debit payment, okay, and then we credit receipt. So if you are receiving money into your bank account, you receive a credit alert. And when you are making payment, you receive a debit alert. And I think your parents can help you appreciate these things if you ask them about how they operate their bank account. Okay. So I want you to picture this. So if I have an account with GCB, if I receive a check, as a business, I'll debit the check in my cash book, as we all know from the double entry principle. But when I go to GCB, GCB will credit my account. And vice versa, if I do payment, I'll credit my cash book. The bank will do what? Debit. So all other things being equal, it's expected that all the entries you have at the debit side of your cash book, you should see all of them at the credit side of your bank statement. And all that you have at the payment or credit side of your bank account in your cash book should be equal to all the things you have here. Okay, so if one is here and it's not there, then there's an issue. You need to do the reconciliation, right? So, professors, I think I'll take time to go through the items one by one, unpresented checks, uncredited checks, and then you would appreciate how it works in both the cash book and the bank statement. But I think it is enough. I don't want to add more to confuse you. The basis you have gotten is okay for now. So if there are no questions, I would pause and probably end our discussion, but I'll give you some small questions for you to answer for me on the page. So question time. Questions. Alexia, Deladem, Edem. Any question for me? Okay, if there are no questions, let me review my lesson by asking you the following questions. So if after today's class, your mom asks you, what did you learn in accounting, financial accounting class today? And you tell her, oh, we did bank reconciliation statement. And mommy says, what is a bank reconciliation statement? Please, what will you tell her? Prof. Deladem, what will you tell her?
Please, a bank reconciliation statement It's a statement prepared by the customer of a bank to bring the balance of the cash book into agreement with the balance on the bank statement.
Exactly. That's perfect. Thank you very, very much. So if mommy goes ahead and say, this plenty English you have said me, I don't understand. No, help me understand. Then what would you tell her? Well, I think I'll do that. So you would tell mommy that, mommy, you have an account with GCB Bank. GCB is keeping records of the transactions you have with them. And that record is called a bank statement. And I'm sure, mommy, you also have your small notebook you keep records, and that is the cash book. So it's expected that whatever you have in your notebook should be equal to whatever GCB has. Okay, but sometimes due to certain reasons, the balances are different. And so we do the reconciliation statement to sort out that difference. Okay, and I think mommy would appreciate it so much. Okay, what if mommy then goes ahead and says, so what are some of the reasons why GCB's balance will be different from the balance I have in my cash book or my notebook? What will you tell her, Professor Adam? What are the causes of that difference? At least give me two.
Okay, so unpresented checks and then dishonored checks.
Exactly. Thank you very much. I wanted to ask you if mommy says, this is the sanity check, what is it? But I know you can't explain it to her perfectly. Prof. Alexia, can you add on to the ones Prof. Adam mentioned? You can type in the chat if your microphone isn't responding well. Okay, so while she does that, I think I'll end here. I will share the notes with you, okay? I would have loved to finish the topic before sending the notes so that you don't get confused when you read further ahead. Okay, so let's discuss which one will be more favorable to you. Should I send the note in advance or when we finish the topic? Okay, so Alexia just added that errors made by the bank and then bank charges. So that's true. Okay, so professors, thank you very much. I'll put some small, I call it some quiz exercise on the main page for you to answer for me. Maybe a feeling or true or false or multiple choice or simple defined state, etc. Okay, thank you very much. I appreciate your time. I'll see you in the next class, but in the meantime, I'll see you on the page with the exercise. Enjoy the rest of your day. Bye bye.